Welcome to ForexTV.com's PM Exchange. It's Tuesday, February 12th. I'm Remy Hoki. Today I'm joined by Boris Schlossberg, Senior Currency Strategist at DailyFX.com. Good afternoon, Boris.
Hi, good afternoon. Good to be with you, Remy.
Great to have you on the show today.
My pleasure.
So in today's session, we're seeing continued dollar softness against the euro as well as the sterling. But let's start out with euro-dollar first. Last week, we saw the euro pull back significantly against the U.S. currency, but post G7 and after the comments out from the ECB, we've seen a divergence between what people expect to see from the ECB. So if you could give us your take on what the primary drivers are for the U.S. dollar pullback today.
Mainly, actually, I think it was really Warren Buffett. The euro definitely found a very, very solid floor at the 144.50 level after the dollar had a corrective rally for the last several weeks. Post G7, ECB came out relatively hawkish, despite the fact that Eurozone data is clearly getting very, very soft. But really, the story today was basically Warren Buffett. What happened was he had come out saying he was going to guarantee the $800 billion worth of bonds for the monoline insurers. That created a massive removal of worry from the equity market. Equities verticalized, and then, of course, created flows to the carry trade, which in turn levitated euro-yen all the way up, and that brought the euro-dollar up. Up until that point, euro-dollar was really sort of struggling 20 points either way of yesterday's close. But this was the big story that lifted everything up. And it looks like we might be closing out on the highs, and risk assumptions should pretty much continue for the rest of the night into Asia.
And indeed, we've seen U.S. equities rally in today's session on the heels of the Warren Buffett news. And the Dow Industrials saw a triple-digit gain up over 200 points in the session. Right. But meanwhile, in terms of price action for dollar-yen, we've seen it stuck in between 106 and 108. So going ahead to the upcoming session, what ranges do you expect to see in that pair?
Yeah, dollar-yen is really, I think, contained by this 108, 108.15 level, primarily because U.S. interest rates are clearly expected to go down further, and the compression in the interest rate differential between the dollar and the yen is becoming very, very severe. So dollar-yen as a de facto carry trade is losing its luster by the day. And dollar-yen really only rises when euro-yen rises itself on the heels of it. It doesn't have any intrinsic flow into it. So that's why you're seeing a much more modest rise in dollar-yen relative to euro-yen and euro-dollar itself, which are much more preferable carry trades at this point in the currency market.
Okay, I want to shift our focus over to the sterling. We had a CPI and PPI data out from the UK, but tomorrow we'll also be getting the BOE quarterly inflation report. We've seen sterling strengthen against the dollar, breaking 196 in today's session. But given expectations of more rate cuts from the BOE, if you could give us your take and strategy for trading sterling against the majors right now.
Yeah, sterling's story was actually very interesting today because we had very hot PPI numbers yesterday, and they were completely reversed by the CPI numbers today. It basically suggests the following, that UK businesses are facing very, very strong cost pressures on the input side, but have virtually no pricing power on the output side. And that creates, in my opinion, a very tight squeeze on profit margins, and most likely necessitate further easing from the BOE. But the BOE is sort of refusing to, I think, acknowledge the inherent slowdown within the UK economy and still focusing very much on pricing pressures. It's focusing much more on the input cost side of the equation. And tonight's inflation report could perhaps be more hawkish than the market expects. That's probably one of the reasons why the pound has managed to remain relatively buoyant in this environment, because the market still thinks that the BOE is going to be more hawkish than dovish, despite the fact that UK economy is starting to see some serious signs of slowdown. The other interesting thing that's going to be coming up today is going to be the UK employment report. And if that shows a serious sign of deterioration, really it's going to be very hard for BOE to justify remaining hawkish for the rest of the quarter.
Okay, and speaking of hawkish, we got hawkish commentary from the RBA, and we had another rate hike last week from the RBA up to 7%. And given that today's session we saw COMEX gold futures down, and as a result, Aussie has also moved down, but we haven't seen Aussie against the U.S. currency rally back up to recent highs. So given what we're seeing fundamentally, what's your technical outlook for the Australian dollar?
We're actually still relatively bullish to the Australian dollar. The Australian dollar looks like it could potentially retest the highs at 9,400. One of the interesting things that happened today, we had a front page story in the Wall Street Journal talked about massive global demand for coal. Australia happens to be one of the major producers and beneficiaries of coal demand. They supply China with a lot of their coal. And the fact that there is this incredible global growth that continues to grow in emerging markets, and Australia is essentially the primary producer for all of these emerging markets, really creates a very different monetary environment for them than the rest of the world. And the fact that they're hawkish is not just simply sloganeering. It's really a reality of the fact that their economy is still busting at the seams. So long term, there's really quite a strong potential even that Aussie could go to parity of the dollar if resource economies continue to be in high demand.
Well, we're talking about resource economies. If we could just briefly touch on the Canadian currency, what is your forecast for the Canadian currency against the U.S. dollar as well as the yen?
Yeah, the CAD is a very, very tough call to make. We've seen pretty serious deterioration in the Canadian economy, especially because it's so dependent on the U.S. economy. But on the other hand, latest employment numbers were actually quite good. And oil still remains in a healthy, above 90 level zone. So we are more bullish the Aussie than we are the CAD. But that having been said, if this global slowdown turns out to be much more mild than anybody thinks, then the resource economies and resource currencies, Australia, Canada, and New Zealand, will actually probably turn out to be some of the best trades in 2008 because it's really a bet on further global growth. And those countries clearly have the best beneficiary of that trend.
Okay, Boris, last but not least, looking ahead to tomorrow's session, we mentioned what's on tap in terms of the UK as well as the Eurozone, but we also have the first major data release out in the US at 8:30 a.m. Eastern Time, which is retail sales.
Right.
And also President Bush is expected to sign the fiscal stimulus package tomorrow.
Right.
So taking all of that into account and your forecast for retail sales, how do you see all of tomorrow's events playing out in action for the majors?
Yeah, ironically enough, we're bearish retail sales. I think retail sales is going to come in worse than expected, especially because auto sales were horrid this month, and they're probably likely going to weigh on the overall number. That having been said, though, the market has really almost gone by that story. Unless the retail sales is so massively bad that it's just a shock to the market, a bad number probably will be just dismissed. And the market will focus, and what I mean by that is that the market being the equity market at this point, which will be the most sensitive one, will probably focus on the stimulus package. Should that be the case, dollar-yen could continue its rally as equities continue to the upside. If the number is really horrid and it's a shock to the market, dollar-yen probably would be the best trade in terms of a short because risk aversion will come right back into the market.
Okay, Boris, thank you very much for insight and analysis this afternoon.
Thanks. It's great to be with you as always.
Thank you. This has been your Forex News with Boris Schlossberg from dailyfx.com. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks ended higher on the day with the Dow Industrials and S&P 500 closing up. Today, Warren Buffett offered to take on $800 billion in municipal bond risk from the top 3 bond insurers. Buffett proposed to provide extra guarantees in muni bonds backed by troubled insurers MBIA, Ambec Financial Group, and FGIC Corp. Buffett revealed that one of the 3 insurers had rejected his offers. Investors still remain cautious about today's events in equities. At the closing bell, the Dow Jones Industrial Average added 133.40 or 1.09% to close at 12,373.41. The tech-heavy Nasdaq was flat, down 0.002 at 2,320.04, and the S&P 500 advanced 9.73 points or 0.73% to close at 1,348.86. In the fixed income market, U.S. long-term Treasury prices fell today as equities were lifted. Demand for stocks saw lower demand for bonds. The benchmark 10-year Treasury note fell with its yield up at 3.67% from 3.62% late yesterday. The 30-year long bond fell with its yield up at 4.46% from 4.4% in the previous session. And the 2-year note ended unchanged with its yield at 1.96%. Taking a look at energy, NYMEX crude oil futures declined as commodities fell across the board. Today's pullback in futures prices ended a 3-day rally for crude. Earlier today, the Energy Department reduced its 2008 forecast for crude demand and prices. March crude fell 81 cents to end the session at $92.78 a barrel on the NYMEX. Tomorrow morning at 10:30 a.m. Eastern Time, the EIA will release inventory data for petroleum supplies. Analysts expect to see another rise in crude inventories. Also weighing on prices is the ongoing conflict between Venezuela and the U.S. Taking a look at energy futures, which also declined across the board, March heating oil fell 1.33 cents to end at $2.59.11 a gallon. March gasoline futures fell 2.82 cents to close at $2.368 a gallon. Meanwhile, March nat gas futures fell 9.5 cents to close at $8.436 per million BTU. Over in the metals complex, precious metals fell today after rallying in the previous session. April gold fell $15.90 to settle at $911.10 an ounce. And in other metals, March silver was down 22 cents at $17.25 an ounce. March copper was up 15 cents to settle at $3.56 a pound. This afternoon, we're joined by Paul Britton, analyst at Aileron Trading. He'll recap today's session in commodities and also give us his short-term outlook.
Good afternoon. This is Paul Britton with Aileron Trading in Las Vegas, Nevada. Today in the energy markets, we saw the energies weaker across the board for the first time in the last 4 trading sessions. Basically, they're selling off in anticipation of another increase in inventories data, which will come out tomorrow. The estimates are calling for another increase. Now, this is all in face of all this saber rattling going on out of Venezuela. They're going to sue, they're going to sue somebody for something. And despite all that, we had the energy market sell off pretty sharply. We've got crude oil down 90 cents, trading at 92.70. We've got heating oil down 148 at 258.96, and gasoline down 333, the triple threes at 236.29. We even have natural gas down on rumors of another release of or opening up of a new gas field in Colorado. Now, another thing to point out is that a lot of the technicians are screaming, to get their attention heard, that the crude oil market's forming an all-important head and shoulders, top being in the right shoulder of that formation. However, most of those things you don't know if they're really, if they're actually going to happen until after they happen. But it's always fun to watch. All right, so the energy markets lower across the board, which brings us to the metal markets, which are also lower across the board. Pretty much, the metal markets are a reflection of what's going on with the U.S. dollar. The U.S. dollar was finding a little bit of strength today, which is causing a lot of the precious metal traders to take a break. You've got some of them, especially the gold market, trading at all-time highs. So, it's nervous hands trading in that market. They keep waiting for the crash, so they're trading light, and any signs of weakness, they bail out. The market was pretty volatile today, though. Right now, it was down $16.80 on the June contract, ending at $914.40. It's still over $900, though, which is like $50 higher than the all-time high set back in 1980. Going to the silver market, we had silver down almost 30 cents at $17.19. Again, we're trading at like a 20-some-year high on silver. 20, maybe I'd push 30, about 28-year high on silver. Copper was off slightly today, and that's about it for the metals. And that's all I've got for you today. Again, my name's Paul Britton. I'm out here in Vegas. Thanks for coming.
That was Paul Britton from Aileron Trading with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.